Hart, welcome to Real Vision.
Ash, thanks so much for having me.
It's a pleasure to have you. We were talking a little bit off camera. You have a pretty serious, hardcore academic background on the tech side. I know that the early part of your career was actually in finance at Goldman. We'll talk about that in a few minutes. But tell us a little bit about your experience and your background on the technology side.
Honestly, I'm just a computer science nerd. That's just what I liked in high school, and I went to college and studied CS. And frankly, I never thought I'd work in finance. I just enjoyed my computer science learnings, and I thought briefly about getting a PhD in CS, but realized that might be a lonely profession.
Right.
The story actually, Ash, like I ended up in finance because I'm Canadian, and I was going to school in New York. And when I graduated in 2005, there was no tech scene in New York whatsoever.
Hmm.
And I needed a big company to get me a visa. And the only companies that would hire really at the time were the investment banks, the big banks. So I found my way into finance purely as a means to stay in New York after college.
So you made the well-trodden trek from Columbia University downtown to Goldman Sachs. And tell us a little bit about what you were trading there.
Yeah, so I was trading government bonds, U.S. Treasury bonds, U.S. Treasury debt, which I wasn't. It was also bizarre how I ended up in that because it's a really old school trading seat. This is like probably one of the older markets.
Yeah.
And for a while, I was the what was called like the 10-year Treasury trader. So I traded the 10-year part of the interest rate market. And usually nerdy people like me worked in structured products like mortgage-backed securities or like exotic volatility or something like that. This is what was called like a flow product. It was fast-paced trading back and forth
Right.
that I happened to fall into. And it was super fun. We worked on this desk that did a lot of really interesting arbitrage, future basis trading, really kind of technical, nerdy stuff. And I worked with great people through the entire financial crisis. So again, there's a whole podcast of information I could tell you about that time. Maybe we could do like some highlights. But when the Fed was first doing their bond buybacks, I was actually the guy at Goldman that was like typing the prices in the computer to sell the Fed bonds, which was
Wow.
pretty wild.
That's surreal. And also the 10-year, right in the belly of the curve, this sort of like this key term that you were trading basically right out of college without being a finance major, not having a finance MBA, just a really smart tech guy who was at this place at the most pivotal point in the history of the last 50 years of finance.
Well, it's awfully generous of you, but there's something to be said about just having a high performing team here, right? I was lucky. This is pure fortune that I found myself into this team of people that I'm still very close with that are the opposite of the Goldman Sachs kind of what people think of Goldman Sachs. These are just nice, intelligent, smart folks that work hard. And I was raised on this awesome team, and we just did cool stuff. And so they taught me everything I know. Two of them, one of them was my co-founder of UMA, Allison Liu. Another one, Kevin Chan, who's my boss, now works with us directly. So this is a group of people that I've stayed very close with, and we were just able to learn a lot together.
I worked on the fixed income trading floor at BB&T, and we did mostly high yield there, but we had one guy who did govies. And I think that one of the things that people may not realize who haven't been in the bond space is that, these are razor thin margins in government bonds and just massive block sizes.
Yeah, no, it's crazy, right? So, but it also shows just how you learn a skill and like how you can abstract concepts away. So, you're doing these trades, and this is the other thing. Like the reason why I kind of ended up in this seat is I was the guy with the computer science background, and we were beginning to automate or build tools to help with execution of these really big trades. So you'd come in and somebody would try to sell you $1 billion 10-year treasuries, and you're pricing here, you're trying to make like 50 grand on the trade, but you could easily lose $250,000 or more if you screw it up.
Right.
And then at the time, I had a dual role of like doing the trading, but also project managing the automation of some of the tools we had to handle these types of trades. It was really fun, honestly. Really fun and learned a lot.
Yeah. There's probably no other market in the world where there's enough depth to do these billion-dollar block trades without moving, tremendously into the illiquid zone.
The whole thing was wild. So, and again, we had a bunch, we approached it as an engineering problem. So again, I learned a lot from my team that I was with, but this was like, we approached all of our trading strategies as engineering problems of like, how are we going to be able to deliver this service? What is using relative value trading strategies like what's rich cheap? How can we best absorb this trade to minimize market impact? It was really, frankly, a really fascinating job through that period of time.
Yeah.
It's a lot more boring now, actually, which is part of the reason why I left.
Right.
But the financial crisis happened. Stuff was really, really interesting through it. And then everything normalizes. And then you're kind of like, okay, well, this is less exciting. And then it's also getting automated in a way that it should, the trend towards general automation. And so I just felt very fortunate to be able to learn in that environment in that time.
Yeah. Obviously we're here to talk about DeFi today, but it's such an interesting topic and so intriguing to see how the dots get connected in people's lives, especially when they're entrepreneurial, and how their past history and things that they did feed into the new businesses, the new products, the new services that they develop. Obviously, you were at Goldman. You did this for some time. You were there for almost 8 years in this role. What were some of the lessons you learned? What did it sort of trigger in your head as you started to think about making this transition into the decentralized finance space?
Well, there's a few. I mean, one actual lesson I learned, how few market participants it takes to make a deep and liquid market. This was like very counterintuitive to me. But there was, for the very beginning of my career, I traded something called agency bonds that were Fannie Mae and Freddie Mac's debt instruments. And there really were only like 4 or 5 people that actually like played in this market in any depth. And yet it was like crazy deep most of the time. So there's this like one like really technical lesson, just bizarre, counterintuitive thing where a small number of people coming together can create a large amount of depth in a market that persists. Like then second lesson, that depth persists 99% of the time.
Right.
And then in extreme circumstances, it all vanishes and disappears. And right. The correlation of everything goes to 1.
Yeah.
So yeah, market structure was like just a fascinating thing to kind of learn and breathe. And I think it's also the kind of thing you can't really study. You can only kind of experience.
Yeah. Yeah. It's funny, there's the joke is there's always a ton of liquidity except when you need it.
Exactly.
Yeah. So really interesting. And so how do you then begin to transition from that into the next series of roles that ultimately led to UMA?
So I left to start a fintech company. And I guess actually by means of also connecting the dots. While I was at Goldman, Fred Ursum, now the co-founder of what became the co-founder of Coinbase, was my colleague and friend. He was 5 years below me, and he was actually on the FX desk when I was on the rates desk, and he didn't love his time there, but like we connected over kind of like he was a CS guy that found himself on the Goldman trading floor too. So he's my connection to crypto. What I should have done when I left Goldman in 2013 was just start a crypto business.
Right. That's what we all should have done in 2013, Hart.
Yeah, I should just join Fred at Coinbase is what we should have done. We all should have done that at the time. But instead, I started a fintech business called OpenFolio. It's really a personal finance tracking app, an investment tracking app. And the thought process here was to actually aggregate information about people's investment decisions to help them make better investment decisions. And it was really interesting. We got this data set of people would like anonymously share their investment portfolios with us, and you could see all the investment mistakes that people made in aggregate, which was super fascinating. That business gave me a lot of exposure to being an entrepreneur, starting a business, growing a team. Also, I learned a lot more about, I guess, the investment side of finance rather than just the trading side. It was like a moderate success. We didn't find like explosive product market fit. And that business was acquired by an asset manager in 2017. But it was this great almost 4-year stint of me building a fintech business in the kind of early days of crypto.
Hey, if you like this clip, be sure to check out the full interview and more only on realvision.com/crypto. It's 100% free. Sign up now.